And I'm thrilled to have with me today from Sage's Edward Warren. Hello, Edward.
Hey, Rob. Nice to see you.
Thank you. Great to have you back. And Edward, we don't bring everyone back a second time, but we did a wonderful episode just recently on talking about the power of pipeline and pruning and targeting. Would you just summarize for the listeners who haven't heard that yet? And we will put that show into the show notes, what we talked about there.
Sure. We spent some time drilling down on the value of culling under producing or low margin accounts. We also spent some time talking about how to build new business to replace that either unprofitable or low realization work, and targeting really just to focus on specific areas where you or members of your firm have expertise. The value of being a specialist versus the value of being a generalist.
That's a really good summary, and not all clients are the same, I think we concluded. And as accounting professionals, they've got to be a little bit more discerning and building pipelines so that they can get rid of the wrong kinds of clients and bring in the right kind of clients. And today we're talking about another subject very close to your heart, which is CAS, Client Advisory Services, Client Accounting Services. Why is this important, Edward?
Well, the market is growing. Firms, businesses, nonprofits are realizing, just like they did years ago with IT, that they don't need to necessarily be in the business of having an IT department, or in this case, an accounting department. Businesses need accounting data to be able to make decisions and to be able to forecast, but do I need a staff, let's say in a $5 million company, do I need a CFO or a controller to do all of the financial work at a cost of maybe $150,000 or $180,000 a year in benefits, when I can essentially outsource all of that to a trusted advisor who closes the books for me, who provides my financial statements, and provides dashboards and the kinds of insights that I need to run the business, as opposed to having all that and doing that for a fraction of the salary and benefit cost of a full-time team. And
I'm interested that you used the word fraction, because we've got this phrase now, a fractional CFO, a fractional finance director. And we can't necessarily, in keeping things lean, employ somebody, like you said, that's dedicated to a role, depending on the size of our business. So we would look first to our accountants, those trusted advisors, to say, beyond what you're doing with compliance, how else can you help me grow my business and occupy that role? So there is a whole community of fractional experts out there, but you would go to your accountant first, Ron, would you? You would go to your accountant first, Edward, would you, in deciding you're the first pick here off the bench?
Absolutely. Most larger firms, and when I say larger, firms in the top 400 or 500 in the US, I'm sure a similar number of firms in the UK and in Europe, typically those firms have a practice of a sort. There are also plenty of firms out there, outsourcing firms, they're maybe called business process outsourcing firms or BPOs, that do this work. Even Jeff Bezos has invested in a company called Pilot that does this work. Now, they are typically working in very small businesses and maybe in franchise groups. But there's plenty of that work out there. Many of the CPA firms in the States have specialties. Maybe they do McDonald's franchises. I have a partner that I worked with Sage Intact, who has a number of Jamba Juice franchises. And what's interesting about that, and I may be jumping ahead here, is when you develop that particular niche of McDonald's franchisees or Jamba Juice franchisees, you develop as that fractional CFO. You may know, because you're working with 30 of them, what the metrics should look like. You would know who's underperforming on revenue per hour. It's interesting, as private equity and outside ownership come into accounting firms, you are seeing the separation of tax and advisory from audit. What's also interesting is you look at firms that are merging or being acquired. The thing that is of most interest to an acquiring firm is the recurring revenues that come from advisory service, and particularly in the CAS space. There are a couple of things specifically about CAS, including higher margins and essentially sort of an assembly line that can work at the same pace for 12 months versus compliance work, be it tax or audit, that seems to be jammed into sort of a 3.5 month cycle, or in the case of audit, it might even be a little bit longer, but much of the audit work is happening in the fall because of a 6/30 year end or a 9/30 year end. So one of the values is you don't have to staff for those crazy peaks. You can staff for essentially a continuous stream of monthly closes for X number of clients, which is interesting, but also because the margins are typically better than they are in the compliance work.
And are you saying here that accountants should leave the low-level automated compliance to Pilot and the other low-price service providers, get your accounts done for $20 a month kind of thing, so that they can pick up on that consulting work?
Sure, absolutely. There's always going to be a segment of the market that isn't ideal for traditional firms or for CAS firms. Many people who don't value the expertise that that trusted advisor brings shouldn't be your client, because they aren't willing to pay for the expertise. They aren't willing to pay for the experience of somebody who may have 10 or 20 or 30 years of industry expertise. They're not going to value that fractional CFO relationship. They just want, and again, we can throw it back to compliance. They just want the tax return done. They're not looking for tax planning. They're not looking for retirement planning. And if that's the case, you probably don't want to be with that client.
And that's very much a case of some clients are right for compliance, some are right for advisory and consulting work, and having good conversations with your clients, managing expectations, finding out their goals and objectives, which accountants should be doing anyway. That allows you to segment your clients and deliver them exactly what they want. You talk about verticals in your sales and marketing speak, Edward, and we talked about niching a little bit in the last episode we did with you. Why is that important?
Verticals allow you to develop specific industry expertise. For example, I worked with a partner at a firm who specialized in private clubs. He understood the tax law for these particular types of nonprofits. He understood many of the key metrics. He published a benchmarking report every year that literally provided the kinds of dashboards that somebody who's running a club would want to see, just like I mentioned Jamba Juice earlier, and somebody who specializes in that particular franchise group. That knowledge has value. If you are essentially an accountant to the masses, you never really develop specific expertise or knowledge that allows you to go to that next level of advisory support, of being that trusted advisor. Because if all you're doing is a 1040 or a 1041, or that anyone, I shouldn't say anyone can do that, but you're ticking boxes. Sitting down and having a conversation with a client about their cash flow calendar and 5 to 7 key metrics that they should be running their business on, and having a conversation about potential mergers, that is not something someone who's just ticking boxes can do. Yes. That is a true trusted advisor, and that is worth a premium. But that also comes with specific knowledge that you can have in a vertical that you really can't have as a generalist.
I couldn't agree more. Being specialized in whatever sectors you're in allows you to spot the patterns, to adopt that vocabulary, to empathize with those problems, to point out what others are doing in that sector that's best practice and what isn't working, so you can speak with authority into that sector and flag up to that client what is important, what they should be thinking about, what's coming up. And that's, I guess, how you start to amplify your value as a trusted advisor to your clients.
Absolutely. Couldn't agree more.
How scalable is CAS?
It's pretty scalable. I work with firms that have 45 people in their CAS practice. I know of CAS firms that are generating 40 and 50 million a year in revenues that are just CAS firms. And many of the firms that do CAS especially well are not CPA firms, or they're not formed as CPA firms.
Okay.
They may have ownership that happens to be CPAs, but they are really consulting businesses, which also means they've got less risk than a traditional CPA firm would have. I think those firms are also a bit more nimble. One of the challenges in partnership businesses, which most CPA firms are, is many require that a majority or a plurality of the partners agree on something if they're going to try something new. One of the things that's challenging about CAS is the traditional measures of success, like realization rates and utilization and so forth, are not that important in the CAS space, or they're not as meaningful. So there's a different set of metrics. It's a really different business model. And it requires to grow and scale a level of entrepreneurialism, perhaps, that a traditional firm won't necessarily support.
That's an excellent point too, because accountants are often being called on by their clients to think more like entrepreneurs and business owners, but accountants don't have that mindset. So they lack those entrepreneurial skills, but they've essentially got to be running their own business like they ask their clients to run a business. Be more entrepreneurial, be more commercially aware, be more business savvy.
I mean, I think the first rule of entrepreneurialism is you can't be risk averse. And what is the definition of a CPA? They're conservative
Yes.
and risk averse.
It's all about risk, isn't it?
Absolutely. Absolutely.
Is there a CAS ladder where we start to emerge from compliance and we move through the gears, we move beyond just doing the accounts and move up the scale? What does that look like, Edward?
There is, or I should say there can be. Right now, I would say that 2/3 of the people in the CAS space are really focused on looking back, looking at the rearview mirror, which is what a traditional accounting department in a firm, in a business would do, where client advisory services sort of rises above the traditional accounting department is that fractional piece and the advisory piece. What the really good practitioners in the CAS space today are doing is they are not only closing the month and providing financial statements, they may be providing 3 or 5 or 10 hours of fractional CFO support to help make decisions, potentially to do board meetings and board retreats. They may, provide a series of dashboards to ownership and boards of directors, the kinds of things that would help them think about where can I take this business or this agency or this nonprofit over the next 12 to 36 months. So instead of looking in the rearview mirror, we hopefully are providing foresight and decision support.
Yeah.
And that's really where advisory happens. Advisory, giving somebody advice about their taxes after you filed a 1040, it's not especially useful.
Yeah, that's why it gets commoditized. It's not valuable. So we're talking about moving beyond the write-up and the controllership and those really basic 101 advisory stuff, some reporting, a little bit of dashboarding, a little bit of analytics, to get into the strategy and the future focus and the providing business insights so they can make better business decisions going forward. That's what we're talking about here. That's where the value is.
Absolutely. You know, if I can sit down, or one of my partners can sit down with a business owner and help them chart their strategy for moving into retirement over the next 5 years, can help them maximize the valuation of their business over the next 5 years, can help them plan for tuition for their grandkids to go to college, you know, weddings, and you know, all of the things that business owners think about as maybe they pass the torch, maybe they sell their business to their employees. That's a place where having industry specific knowledge and being a fractional CFO really, where the rubber really meets the road.
Are we talking then about the evolution of CAS beyond a 1.0 and the basic management reports to the areas you're talking about? Is this CAS 2.0, or are we even at 3 and 4.0?
I think we're at 2.0. And, you know, realistically, I think many of the CAS firms are maybe at 1.5, but they certainly understand the value. And I again, going back to the entrepreneurial thought, I think that the BPO firms and the firms that just focus on CAS get it and are more nimble because they don't have all the constraints maybe of being part of a larger firm that has a less forward-thinking culture. Many of the partners, the folks that I work with, are part of traditional firms, and they're still doing tax work during tax season, or maybe they're doing audit work during audit season. And that limits the growth and limits the focus of that practice in terms of what they can do from a growth and development perspective.
One of the objections that accountants have with CAS is that it's something extra I need to sell. It's okay having advisory services and consulting, but I've now got to position that, I've got to price that, I've got to have that conversation with the client, I've got to do that negotiation, I've got to value price it, or however else you do it. So sales and marketing become an important part of the CAS jigsaw, Edward.
They do. And, you know, again, in the firm world, maybe you don't have to sell that as a partner as much as you have to put the CAS practice leader in front of your existing client. You know, so many, especially in the entrepreneurial businesses, maybe 5 million and under, that are family businesses. Maybe there's a spouse or a relative who's doing the accounting because they have time, not necessarily because they have expertise. But helping that client move from that tax and maybe tax planning relationship to a, hey, you know, for $3,000 a month, for $5,000 a month, I can give you high-end financial services and trusted advisor support on demand. That could be a game changer.
This is great, Edward. It gives us a lot of clarity around CAS, which is an area of opportunity for accountants, but it's also an area of challenge for them. I'm going to ask in a few moments to just leave our CPAs and accountants listening with some words of advice to perhaps get started with CAS or move further down the road. Just before I do that, give us a flavor of the kind of things you do at Sage Intact and what your role involves.
So my role is working with CPA firms and CAS practitioners on growing their practices. You know, we sell, or my team works with several hundred CPA firms and BPO providers. Our role is really to be advisors to the advisors, if you will. We talk with them about their pipelines on a regular basis. You know, we want to make sure they understand the product and they're certified on it, but we also want to make sure that they're doing the things that will help them grow their practices. We provide them with marketing support, with some tools, if you will, to help them both from a practice perspective, but also on a growth perspective.
That's really good to know. Accountants need advice themselves. And do you feel they're coachable as a breed? They're teachable, Edward, in the stuff you'd like to share with them?
I think they are. Not universally, certainly, but we're talking about human beings. You have a bell curve. I sort of feel like I can work with probably 80% of them at some level. And I've successfully talked with several of them about building pipelines and having pipeline sessions, and they get it. I've also talked with a lot of them about web content, about blogging, about, putting things out on social media that will reach the particular client personas that they're going after.
Being a thought leader.
Being a thought leader, exactly. I've been waxing poetic about this partner that I used to work with, but if you looked up thought leader in Webster's, his picture would be there, because this is the guy that does the annual benchmarking report. He speaks at these conferences, both nationally and internationally. And that's really what you need to do if you want to build that visible expert thought leadership profile. That's what you've got to do. And then you're going to have people coming to you. I listened to a presentation, top firm, probably $10 or $12 million CAS only firm. And they're in a space where a third of their business comes from referrals, a third of their business is driven by web and social media, and a third of it comes from conferences. I talk to accountants all the time. They'd say, most of our business comes from referrals. And I say, do you track that? And what percentage is it? Well, no, we don't track. Well, if you don't measure it, it doesn't matter.
Edward, this is terrific. Just leave our audience with some words of encouragement to get started down the CAS route, or even embrace CAS 2.0, or even get ahead of CAS 3.0 when it starts to emerge.
So understand that as a new service offering, this product is going to, or this service is going to continue to evolve. There are some great resources depending on what part of the world you're in. There are, whether it's AICPA or chartered accountants in the States, CPA.com does a lot of training. They do a 2-day CAS workshop. They actually have a CAS certification that I believe includes 3 or 4 different courses. That's something you should look at. I have done some training. I haven't done any lately with CPA Academy, My CPE, both organizations that can give you CAS specific training where you can get CPE for it. Lots of consultants in this space. Somebody I think very highly of is Jen Wilson at Convergence Coaching. There are tons of resources out there. And I think I mentioned, I actually wrote an ebook, 7 tips for growing your client advisory practice. So I think that might be in the show notes. So
we'll definitely put that in. 7 tips to increase revenue with client advisory service. So we're putting the added value in there. It's not just growing it, but it's getting money from it as well. So yeah. Well, Edward Warren, that's been terrific. Thanks so much for your passion and your insights today.
Thank you, Rob. It's great talking with you. Thanks again.